I mean, there's a lot of concern about concentration, Magnificent Seven, US stock market, and so on. Do you look at that as a serious concern or just noise? What do you see?
No, it is a serious concern that narrowness of the returns of the last 12 months and the Magnificent Seven in itself has become an asset class. And actually, we look at it now like an asset class. And, they are such dominant parts of the world index now that in themselves, if those 7 companies for some reason disappoint in the next few weeks, they could all be down 30% and the whole indices are going to go down, right? So you've got to have a view on the Magnificent Seven. You can't just say, oh, well, I'm not interested, I'm a bottom-up stock picker, or whatever the phrases are. You've got to care in terms of how they're going to perform, because they're going to drive the whole markets with them and sentiment. So we take a view on each one individually, but also make sure that we know where our exposure is versus the rest of the market. And right now, our exposure is going down because we're taking profits. Going back to my earlier point, we were reducing Nvidia, we're reducing Apple, we're reducing all those names because they've had such a big run. And the volatility in those names is getting higher because if you think about it, they've gone up so much, and there's so much kind of hype and expectation. If you think of it just from a risk-reward perspective, there's a much bigger risk now of disappointment.
Price for perfection.
Yeah, I mean, I think that they're getting close to that. But even if they're just fair valued, they've only got to disappoint on an earnings call once in this quarter, for example, and the share price could be off 30% because the expectations are so high.